So just about every metal is out of favor right now, but let's look at one that's deeply out of favor, uranium. So you believe that uranium is shaping itself into a new bull market. What's your reasons for that optimism?
That's pretty simple. Either the price of uranium goes up or the lights go off. Although uranium is out of favor, particularly in the United States, it constitutes 19% of the United States electrical supply. Our balance between supply and demand is too tight. If the uranium price doesn't go up, there won't be sufficient uranium supplies to keep the lights on. The price must go up, the price can go up. If it must go up and it can go up, it will go up. It's as simple as that. Will it go up next year? I don't know. But over 3 years, will it go up? Absolutely, for sure.
Okay. What will be the catalyst, though, for an increase in the price?
Well, one thing is Japanese reactors coming back online. The price declined because Japan shut down their nuclear industry. That took away 10% of global demand at the same time that the inventories that the Japanese had accumulated to run their nuclear power plants were sold onto world markets. It took the price from $80 a pound down to $40 a pound. The industry needs $75 a pound to maintain current levels of production. So the demand side is taken care of. With Japan coming back in the equation, it hastens the inevitable.
Right, okay. So on Friday, we saw Energy Fuels acquired Strathmore Minerals for $29 million. Was that a tie-up that you saw coming?
It wasn't a tie-up that I saw coming, but certainly this industry needs amalgamation more than it needs anything else. There's too much G&A across the whole mining space, and combining two companies together and getting rid of one set of duplicate G&A when the assets are both geographically focused like they are makes absolute sense.
Do you prefer small uranium producers, when we're talking about investments, do you prefer small uranium producers to the explorers?
No, I don't. The small mine thesis, where you're going to use the cash flow to grow the company without dilution, is very, very seductive, but it seldom works. The truth is, in the mining business, that small mines, everything that can go wrong with a small mine can go wrong with a big mine, but only a big mine can make you big money. To take the risk that we take in fluctuating commodity markets, you need the potential of a world-scale reward. So I'm looking for people who are doing something on the basis of scale.
Do you have any uranium juniors right now you're watching?
We are long fission, the spin-off of the sort of Denison. Mm-hmm. We're long Denison itself. We're long Cameco. We're long Rockgate. We're long Kivalliq. So yeah, we're long a reasonable crew. The common thesis is the ability to be over 50 million pounds, in other words, sort of be a world-scale deposit, and to have grade. We don't want the really large low-grade deposits where the front-end capital costs wreck the economics, and we don't want a small high-grade deposit where you don't have sufficient scale to matter. We want something, if you will, just right.
So that does point to the Athabasca Basin, right?
The Athabasca Basin is the Persian Gulf of uranium. It's truly spectacular. People don't understand the economic consequence of 10% rock. 200 pounds per ton at $40 per pound. You're talking about $8,000 rock. You're talking about $8,000 of contained value in a cubic meter of rock. It's mind-boggling, the values associated with those numbers.